Well, we've got a business alert. The countdown is on. Just over 24 hours until the public decision is made. They may have already made it in private, but tomorrow we find out whether interest rates will be down.
And right now during our show, you need to tune in at this time tomorrow. 2:15 p.m. Eastern Time is when we will have it for you. But for now, the Federal Reserve Chairman and his board are meeting right now behind those doors to discuss it. At this hour, they're hashing it all out. Now, the markets seem to be basically just expecting at least a quarter-point cut. Some are hoping for a full point, but should Ben Bernanke and company give them what they want? Our Fox panel is here to talk about it. Tom Atkins from Remax Fairlawn, who just met Liz Clayman. I'm surprised about that. Pat Powell.
She is lovely.
Who is old friends with Liz Clayman. Good to see you, Pat. Peter Schiff, CEO of Euro Pacific Capital, and Gary Kaltbaum of Kaltbaum and Associates. Ladies first, Pat. Is it a done deal already? We say that the decision is going to be made tomorrow. Have they already made it?
I'm pretty sure they have.
And what is it?
I think they're going to raise. I'm with the consensus on this. I think they're going to raise. I don't think
mean cut?
Lower.
I mean, sorry. Excuse me.
Raise it lower. You had a 50% chance of being right.
Hey, I think that's been Fed policy for 20 years.
Yeah, right. That's right.
No, I think they're going to cut by a quarter of a point. I don't think they should. But
has it been worked into the market?
Oh, yeah, absolutely. The consensus, if the market doesn't get it, the market's going to have a really tough day tomorrow.
Peter Schiff, whether they raise, and that does seem to be a little bit of the consensus, should they raise?
You mean cut? And no, they shouldn't
Look
cut.
at me. I'm
sorry.
Everybody's unfortunately, they're probably going to cut. It's disgraceful. They should be raising rates. They never should have lowered them in the first place. As an investor, of course, I'm profiting dramatically from what they're doing. My clients and my money is invested in gold stocks and oil and foreign currencies and foreign stocks. These are the things that are benefiting from the inflation the Fed is creating. But the average American, all he's got is his wages. And what the Fed is doing is reducing the value of American paychecks every single day.
Are you nuts? Net income growth has been up 10% per year for 5 straight years.
But
what's so terrible about that? Oh, by the way, I'm not defending the Fed. Quite frankly, I think the Fed has been run bass backwards for at least 25 years. And Alan Greenspan running to Ben Bernanke. Look, right now, the reason why you have a terrible real estate market is because they raise rates too much, too fast. And how do we know? Because the Fed blinked last meeting. They dropped it. Yeah. There's no policy change in America anywhere at any level. That means that they made a mistake and they know it. And now they're trying to fix their mistake.
Yeah, those are nominal. Those are nominal income gains. The average American's wages, their dollars, the dollar is losing value. It's hitting all-time record lows against a basket of currencies. It's going down every day.
Yeah, if you're buying Ireland, it matters, I guess. But if you're buying in America, it's wonderful.
Gary, go ahead.
Purchasing power is going down right here.
Let's let Gary talk. Go ahead, Gary.
Look, after listening to Peter, I'm moving to Switzerland. I mean, everything's heck in a handbasket here. Look, I don't like the Fed. I don't think there should be a Fed. They're probably they're playing Parcheesi right now and having some food.
He's right.
Look, I think they're going to lower a quarter point. I think they should stand pat. Let me tell you who they're catering to. They're catering to Merrill Lynch, Goldman Sachs, Lehman Brothers, Washington Mutual, and all the hedge funds that are 15-to-1 margin in ridiculous products just so they can get things better so nobody goes bankrupt. They're not helping the individual. Matter of fact, mortgage rates have gone up since the last rate cut, so they're doing nothing for nobody as far as I can
see. I agree with something somebody else said.
What about this? We had Alan Greenspan, when we had him on a couple of weeks ago, suggested that maybe, just maybe, the world could survive without the Fed. Is Alan Greenspan right?
Not in that regard. And Alan Greenspan is sort of forgetting what he's done and what Paul Volcker before him has done. He's forgetting that the reason we have such low interest rates has to do with 9/11. It has to do with the Fed loading the market with liquidity to stabilize the economy after 9/11. The fact that we have such a great economy to a great extent is because of the prudent moves by the Fed and the fortuitous tax cut we got in 2000.
No, it's not.
Hold on.
We don't have a great economy.
I am with Gary in that. When he says that the Fed is pandering, there are a lot of people who feel that the Fed gets these phone calls through other people. I mean, who knows who's making the calls?
Let's not forget who the Fed works for.
Us.
The Fed does not work for the American people. It doesn't work for the government. The Fed works for the banks. So what you have is there's an area if the Fed cuts too much, they create inflation. There's an area if the Fed increases rates too much, they crush the economy. And there's a big fat gray area in between, and they're always on the high side where the banks make the money and the people get screwed.
We don't. Remember, we don't have a great economy. We have a terrible economy. We're borrowing. Will you let me finish? We're borrowing a bunch of money from the rest of the world to consume what they produce. Interest rates are low, not because Americans are saving, but because foreign governments are irresponsibly lending us money.
Hey, you know, Peter, before you say it's all the Chinese that are responsible for our good economy, don't forget about all the workers, all the entrepreneurs in the United States who do a lot to make this country great.
We happen to be the most productive in the world, by the way.
We don't have a good economy. We're not the most productive in the world. American workers,
but it's not China that makes this country work. It's the United States workers that make this country work.
But the problem is they're not working enough. They're consuming too much. We're spending too much. We're not producing. We're not saving.
Peter, why hasn't it imploded yet? I've been listening to you for a long time, and this guy, Peter, has made a lot of money for his clients. That is true, and so he's clearly making some money for somebody, but I want to know why then has the economy not imploded?
It is happening. I mean, it's not, I guess it's not going to explode all at once, but you can see what's happening to the cost of living. You can see what's happening to food prices, energy prices. You can see the incredible buildup of external liabilities. You can see the housing bubble beginning to collapse. I mean, it's all happening.
By the price of like televisions and stereos and all the other things that go down. You can't look at one aspect of the economy.
Go ahead.
That's not true.
Pat Powell, go ahead.
Tom has it exactly right. It's a market basket. Yes, oil is going up. Yes, food is going up. But Tom has it right. It's televisions that are coming down. And by the way, housing prices are coming down.
No, you know, we had the same.
Peter, hold on a
that's just not true.
Hold on, Peter. Go ahead, Gary. Go ahead, Gary.
Hold on. This is not the Peter show. First off, I want to say whatever Tom is on, I want to have. Tom, whatever you're drinking, God bless you.
It's called money.
Let me just say this as far as the Fed. If the Fed wants to do something right, let's turn back the clock about 3 years ago when Alan Greenspan watched these lenders lower the bar as far as can be and handed out money to anybody, causing what we are seeing right now.
Alan Greenspan's not responsible for that. Alan Greenspan's responsible for interest rates,
Gang. We gotta move on, but we're going to keep all of these panelists. If you like them for the first round, wait till you see them for the second and the third and the fourth.
Yeah, we're waiting for blood here. It'll happen.
Well, the government and your 401k plan, should the government get involved more or stay out altogether?
Do you think our Fox Business panel has any thoughts on this?
I doubt it. They're so unopinionated, particularly getting Tom Atkins in the fight. But we've got Charles Payne here now as well. Good to see you, Charles.
Thank you. What do you think? Is this just pure danger, or are they looking for some important things to change about the fee structure?
You know, I'm always reluctant to have the government get involved, but obviously in hindsight of what's happened in the mortgage industry and the fact that maybe there should have been better disclosures and better education, I understand where they're coming from, but you don't want Congress involved. Anything like this. In fact, you know, we look at Wall Street, Sarbanes-Oxley, for instance, a knee-jerk reaction to a particular, wave of corporate malfeasance that I think hurt America to the point where now New York is number 2 in IPOs in the world. So you wonder how far Congress will get. Once you let them off their leash, they go nuts, and sometimes it's counterproductive.
Tom?
Yeah, they're always looking for this balance of regulation, how much is going to save you, how much is going to cost you. And if there's any lesson to the private sector in America is keep your closet clean before the federal government comes in and tries to clean it for you. Yeah. It's the worst thing in the world. Like, I'm from the government, and I'm here to do what? That fill in the blank could be anything from help you to crush your life to. So if you're in the business of anything, I don't care what it is. Keep your closet straight. Do everything you can to be honest with the American people.
Peter, is this one thing the entire panel can agree on?
Well, I think it's kind of ironic that the government is worried about these small fees on these 401ks as they're, exacting the greatest fee of all, undermining the value of everybody's 401k by causing inflation and debasing the value of our money. In the last segment,
there we go again.
Well, let me finish this point because I didn't get a chance to do it before. Inflation today is as bad as anything we had in the 1970s. Sure, back in the 1970s.
Wait. Inflation is as bad as anything we had. How do you figure that? Inflation was double digits. It's now less than 4 or 5%.
Let me finish my point. In the 1970s, you had clock radios and digital watches and cassette players. All those things were falling in price, just like consumer electronics are falling in price now. But we had double-digit inflation. The reason we don't show it now is because in the late 1990s, the government changed the way they calculate the CPI. The government decided that they thought the CPI was overstating inflation, so they fixed it. Well, what they did is they now created an index that dramatically understates inflation. So the reason inflation inflation is not as bad as it was in the 1970s is the government was more honest about it in the 1970s.
Gary Kaltbaum,
they're lying about it now.
Peter's problem is that he's so young, he doesn't remember the 1970s. I'm so old, I do. And believe me, inflation was very palpable. You knew that the value of your paycheck began to go down week by week by week. Just
That's happening.
At the same time, hold on, you had your chance, Peter. Just as the same time as your paycheck got you into higher tax brackets, so you had this stagflation that was killing people.
It's happening.
Hold on, Peter. Gary, go ahead.
How did we go from fee disclosure over to inflation in 30 seconds?
Because that's a big fee.
Okay, look.
And we're all paying it.
All I can tell you is I remember the early 80s, and interest rates were at 15, 16%. If there was real bad inflation, the bond market would be crashing right now.
It will be. Don't wait for it to happen. It's going to crash. You know,
Go ahead.
you don't see any similarities between the 1970s? You don't see what's happening in gold?
Peter, you got to hold on. Go ahead.
One thing I do want to say, today we had consumer confidence numbers come out, and the current people's expectations over the last 18 months haven't been this low for the future. And I really worry about people who always talk about fear and anti-this and anti-that. And, I always talk about Peter because he's really he's in that category. And what's happened is the real reason people aren't involved in their 401ks, they have no confidence in the stock market. And they keep watching it go up over and over and over. And it pains me to see so many average people buy a pair of Crocs but don't own the stock, go to McDonald's but don't own the stock. Anyone out there can be a part of this market, and yet they're not taking advantage of it because they're so afraid. So the fear mongers actually create almost a self-fulfilling thing when people don't react and people go into a shell.
Charles, a lot of people saw what happened when they dipped their toe in the .com explosion.
They did. I agree.
They
That
got
was a long time
That's a
ago. And let's
short-term thing,
also, Liz, look what they were buying. They were buying companies and stocks that were on a business plan on a napkin. They weren't buying solid fundamental companies. They didn't own United Technologies or General Dynamics or Nikes. How many people out there own $1,000 worth of Nikes and don't own $1,000 worth of the stock?
Actually, if anybody wants the government to take over their 401k, just look how beautifully they do with Social Security. Maybe that's an example that we should all follow. We got to leave this segment for now, gentlemen. Thank you very much. Fans of the world champion Red Sox in chilly but sunny Boston celebrating their World Series win. An earlier parade winding its way from Fenway Park to City Hall. The Red Sox, of course, swept the Colorado Rockies. They looked like rookies, some of those games, in a fall classic. The second World Championship for Boston in just 4 years.
Who wants to clean that up?
Not me.
Boston fans are messy.
Oh, Liz!
New Yorkers would clean up after themselves.
Right.
And Cleveland, they would not ever drop the paper in the first place.
That's true. They're very clean.
Okay, so check this out, David. What happened in that World Series could cost Taco Bell a lot of money. A taco for each stolen base. It's not a bad marketing idea. In fact, it's really creative. It was cooked up by some of the folks at Taco Bell. So when someone stole a base in Game 2 of the World Series, the taco rush for all customers was on. This is a live picture at the Taco Bell in New Rochelle, New York.
That guy's eating his 24th taco. The guy who's just heading to the bathroom there, you see?
Yeah. Okay, for 3 hours, the fast food chain is handing out free tacos. The first free one is scheduled to be handed out at the top of the hour. Oh, boy, I can only imagine the line.
How many times could you do that? Actually, after our Wendy's Day last Friday, we got to have a taco day here. Tom Atkins was suggesting that. All right, well, people are lining up for free food, specifically a taco that costs around 77 cents. So the question screams to be answered, is that really worth anybody's time? Is it worth your time to wait in line for a 77-cent taco?
Free taco. So we're talking like taco economics, but we welcome back our Fox Business panel. We've got Pat Powell and the whole gang here. Pat, do people value a 77-cent taco more than they value their time of waiting in line for something
You
like this?
bet we do.
Yeah.
There's nothing Americans like more than a free lunch, and Taco's giving it to everybody today. It's not about the time, it's about the event.
You know, Charles, there was a magazine, it doesn't exist anymore, called Spy, which for their first issue, they wrote a series of checks, each one worth less than $1, like a check for 67 cents, to millionaires. Everyone was cashed with their own signature. Right. Donald Trump, all these millionaires cash check. So it was worth their time to sign a check for 30 cents, bring it to the bank, and their deposit.
It's amazing, you know, particularly living in this New York, New Jersey area because of differences in taxes. I'll actually see people who will drive up to different places, 3 hours out of the way to save maybe $10 on this and that. And I never understand why people don't calculate how much their time is worth, perhaps how much the gas is worth. And we love stuff in America, and we love it free. So if you add that together, that combination, forget about it. Free stuff, forget
That's
about
called
it.
penny wise, pound foolish, Tom.
That's right.
You know what, though? What a fantastic marketing ploy.
That's David Novak.
Incredible.
He and that company at Yum Brands, they have a marketing organization there where they sit around and they say, let me come up with the most creative idea. And they do.
And
That's what happens. They come up with amazing ideas.
Even if you don't go to get a free taco, you're going to hear about it. I'll bet you for every person that gets a free taco, 500 to 1,000 people heard about it, and I'll bet you 4 or 5 of them stop by. They're going to make a profit.
Will there
on
be
this.
anybody disappointed or maybe ticked off at the line and say, geez, I wasted my time doing
You know, the
this?
people who are going to be most disappointed are the ones who are working till 5, because the promotion ends at 5, and so they can't get there and pick up a
You know
taco
that's
on the way
part
home
of it.
from dinner.
Of course, psychologically, the longer the line, the better. You know the guys who do the 3-card Monty in the street? They bring their own crowds with them, and obviously the bigger the crowd,
right.
the more everybody wants to get involved in
you
it.
know what?
Wait, let's let Peter.
we've got some
weigh in on
bullshit
the
weigh in.
crunchy taco.
Tell us how it's all terrible, Peter. Tell us how it's all tied to inflation.
You make a good point. With the way the cost of food is rising, and maybe the prospect of free taco. And in a year or two, you're going to see some much longer lines for free food. When people are unemployed and they can't afford this.
So, Gary Kaltbaum, what do you think of Peter there?
Welcome to the Peter Show. Hey,
The
just so
Peter
you know,
principle, go ahead.
Yeah, the taco is now not 70 cents, it's $1 because of inflation. So here you go. Look, this is a great marketing move. We're talking about it. They're going to get a ton of people in there. They're going to buy sodas and everything else under the sun. Great move by them. Whether it wastes anybody's time, look, to each his own. Would I drive 10 miles to get one? No. The next guy, maybe. So whatever somebody likes.
All right, enough of this taco
Hey,
economics.
listen, Yum Brands is up $1.44 today.
There you go.
Geniuses.
And that thing knows the difference.
There you go.
Between 2 and 5, everybody's not working. They're in Taco Bell.
That's a 3 2/3 increase.
That's amazing.
3 2/3% jump in that
You
stock
figure they
today.
got at least 100 million shares outstanding, probably more, so not bad.
Not bad.
$500 million.
And we're here talking about it, too.
Well, this Fox News alert. The Fed is discussing right now what to do about interest rates. The decision will come public tomorrow. The markets seem to think another cut is in the cards.
Our next guest agrees. Diane Swank, chief economist for Mesirow Financial. On the other hand, Peter Schiff, CEO of Euro Pacific Capital. And I'm going to start with Diane here. Diane, tell me, is it the right decision if the Fed cuts?
Well, that's probably still debatable. I think it is the right decision in the sense of the old risk management approach that the Fed used to take under Greenspan, although under this new regime, it's not as clear. We have seen a lot of the repricing in the market come through. The asset-based commercial paper market is still a little dicey out there, but for those people on Main Street, they've not seen much of the spillover yet. And on that side of it, it's not clear how justified this cut is.
Now, Peter, you do see a disconnect a very clear disconnect between Wall Street and Main Street. Explain why.
Well, sure. I mean, Wall Street benefits from all this cheap money, and they can borrow money cheaply and invest it abroad, just like I'm doing. But it's not helping the economy. It doesn't help the average American to see the value of his wages, the value of his savings diminished. I mean, the British pound today is at a new high for, 30 years. This week you had new highs in the Canadian dollar,
So, Peter,
the Australian dollar,
let me
the
just
euro.
understand how to fix things. I think everybody by now gets what you think the problem is, and not everybody would disagree with you. The question is how you fix it. The Fed can do several things. The Fed can make things tighter and increase interest rates as you would like. Also, the Treasury Department, though, could talk up the dollar, which I have to agree with you. It hasn't been doing. In fact, some people would say it's been doing just the opposite.
But talk is not going to help. There is no quick fix. We have a big problem here as a nation, as a society. The Fed can't fix it. The government can't fix it. We need to fix it. Now, sure, the government can get out of the way. The government can reduce spending and reduce taxes and reduce the burden it places on productive society. But we have to stop all this reckless borrowing and spending. We have to stop buying things we can't afford.
How would you stop people from borrowing? Would you put up government regulations about it?
No, you let interest rates go to a normal level. People wouldn't be borrowing all this money if they couldn't afford it. If we had much higher interest rates in line with where they should be, we wouldn't have all this reckless borrowing and spending. That's why the Fed should be raising rates. It doesn't mean we're going to avoid a recession.
Diane, go ahead. Diane, what's your solution?
Okay. Well, there isn't any easy solution. You're right about that. But I do think at this stage of the game, given where the Fed is at, it's going to be a big debate. They will cut rates. It's because at this stage of the game, they have to. And it's not. It does help Main Street a little bit. Those borrowers who are most on the edge that didn't realize they're getting into adjustable rate mortgage, they're not the pillars of consumers of the economy. But, if it stops a couple defaults from happening, that's okay with me.
But it's not going to stop. It's not going to stop
in
defaults.
In the broader context, it will stop a few, not a lot.
Diane, is the
but it will
Fed
stop a few.
pandering to the big financial names out there who have found themselves in trouble because of bad bets they made?
I hate to say that because I have so many friends on the Fed. I do think that Wall Street has had a louder voice. With that said, let's face it, the Fed is the plumbing of our financial system is Wall Street, and when it backs up, we don't want it hitting Main Street, and it's their job to stop it from backing up. So, it's kind of blunt to put it that way, but we don't want that on Main Street, okay?
I understand. I finally understand.
Peter, what do you think? You get the snake out into the drain and start clearing that out?
Well,
Sorry,
unfortunately,
I don't with this one, right, Liz?
I don't disagree with Diana. I do expect the Fed to cut rates. I hope they don't. I hope they surprise me. But, they really need, as I said, they need to be raising rates. Just standing pat isn't enough. And I don't even know how high they need to raise them.
Rates right now, though. That's not, it's not feasible for them to do it right now. That's just not realistic.
At some point, they're going to have to bite the bullet and do it. And the longer they wait, the longer they delay this, the worse it's going to be for every American.
Diane, let me just ask you, at what point might the Fed decide, gee, this dropping dollar is worrisome? It's going to affect the ability of the market to continue to go up because people are afraid that their assets denominated in dollars aren't going to be worth as much tomorrow.
The dollar doesn't affect them as much as most people think because we've not seen as much inflation from the dollar in the last decade in particular.
Oh, yes, we have.
I knew Peter was going to chime in on that.
With that said,
Diane can't see it.
Hold on. With that said, go ahead, Diane.
With that said, the real issue is a couple quarters down the road, we've always found that the Fed's cure to these financial crises has a greater effect on stimulating the economy than the crisis had itself in hurting growth. And that means they're going to have to start taking back. And if you listen to the Fed, they're already talking about, as they're giving us an ease, they're talking about recalibrating as quickly as necessary. It's always easier to give it than take it back. So by mid next year, I would like them to be taking it back. I don't think we're going to see them taking it back till late 2008. And that could set up a much larger problem for us down the road in terms of inflation.
Diane Swank, you're welcome anytime right here on Fox Business. Thanks. As for Peter,
good to see you again, Liz.
Peter's going to be back.
Peter's always
He's gonna
welcome
be back.
too.
All right. Well, the feds have their eyes trained right on your 401k. They say they are ready to examine the fees charged 401 accounts. But is this a case of the cure being worse than the disease? And who ends up paying?
Rich Edson is on the story. We talked about this in the last hour. It's got people riled up, Rich.
Yeah, it really does. We're looking at 401k fees here. Most people pay them when it comes to their 401ks. And the House Ways and Means Committee, headed by Charlie Rangel, is taking a look at whether they're disclosed properly when you decide which 401k you want to choose and which way you want to go with your investment in retirement dollars. Now, some of what the SEC and the Department of Labor were saying today is they're looking into 3 initiatives that would essentially require 401k companies to come back and say, these are the fees you're being charged, this is what you paid this quarter or this year, or this is what you're going to pay if you decide to sign up with us. Now, those, the Department of Labor and the SEC will probably come back in the next several weeks with a firm proposal. There are a couple proposals going on in the House and Senate right now. The industry, the 401k industry, see more on the side of regulation. The folks who testified today said they're for regulation. They like the transparency. They just want to make sure that Congress isn't too heavy-handed by hamstringing what they're allowed to do and making too much of a rigid system where they can't, what they say, innovate because they're hamstrung so much.
All right, Rich, thanks very much. Switching gears now.
Google is taking on Apple in the wireless world.
The search giant reportedly working on its own cell phone. The device would allow you to access all of Google's popular services, including Maps and YouTube, while you're on the go. But is the cutting-edge company a little bit too late to the party? That's the question for our panel. Pat Powell, what do you think?
I think absolutely not. And if you want to think about do you use beta or do you use VHS, you don't have to be first and you don't have to be the earliest to come out with something that everybody's going to use.
But beta died.
That's my point. Is we all use VHS. We don't use the first one, which was Beta.
Betamax, yeah,
Absolutely,
Betamax.
that's my point.
Charles, the iPhone is just fresh out, and so it makes you wonder. Google has to really come out and be something special too to get this kind of attention that the iPhone did.
Absolutely, and you know what? It's good that Apple's done so well because it just sort of enhances what Google wants to do and sort of validates what they're trying to do. They also want to buy spectrum. They want their own band in the airwaves because they want to take this to a level that we haven't even seen. I mean, the Apple iPhone is cute. My wife has one, and you can do a lot of things with it, but to have all the things at Google at your fingertips really would be phenomenal. And this is just to let you know how early it is as far as advertising on this space. It's only a $33 million business right now. It's going to be $12 billion in a few years.
But Gary, there's something about wives and iPhones. My wife has an iPhone as well. But with the iPhone, you can get into all those things that Google is going to let you get into. I mean, it might take maybe one click extra, but you could probably find a way of getting around that.
You can get Google Maps right now on a RIM BlackBerry.
So what's the big deal?
I just think there's something in the world called brand name recognition, and Google has brand name recognition, and I think whatever they come out with, as long as it works, it is going to sell. I don't think they're late in the, of course, they should have come out first, but I don't think overall they're late in the game, and I have the sneaking suspicion they're going to sell a heck of a lot of these things.
But Peter, Google is a search engine. They don't make electronic pieces and property and stuff like Apple does. Would they then license that out to an electronics company?
I don't know. There's a lot of innovation in this industry. I'm sure there's going to be all sorts of new products coming out over the years, so I'm sure they're not too late. Who knows how they're going to do. As an investor, though, I certainly, I think both Google and Apple shares are overpriced. I wouldn't be buying shares of Google because you think they're going to get into...
But would you be buying for the company that Google would license out the phone to, say, make us this phone? And Google
I don't know.
Is a search engine.
I don't know who that company is, Liz. I don't know if it's a good value. I'd have to look at it. I mean,
right.
We've made a lot of money. I own some of these companies in Hong Kong and Singapore that are big in the cell phones. They're supplying a lot of these companies. There's a lot of money to be made there. I just don't like buying expensive stocks.
Right now, the betting is that LG might do it, that they're talking to LG. They're talking to different people in Asia, but LG seems to be at the top of the list now to actually make the phone.
Back to your analogy. You were talking about Beta and VHS. Of course, Beta died.
Right.
But
You don't have to be first.
Apple and PCs have coexisted for quite some time now, going on 3 decades. Is it possible that you could have iPhone be successful and Google's phone be successful?
Absolutely, and there's a lot of room here, as Charles was saying, for advertising, because a lot of this, the technology hasn't really figured out how to fully pay for itself. We're in a highly restrictive and regulated industry when you talk about phones right now. Google could open up the whole platform for everyone. I think the real winner here is not necessarily Google or Apple or LG. The real winner may be the consumer.
I don't know. You wonder, Gary, if you look at Nokia, which was just a huge leader in the 90s, and then here comes Motorola, comes out with that Razr phone. And then you look at other competitors coming out with the chocolate, etc. And it makes you wonder, it's not first in wins. It's who has the most innovative thing.
One thing I think is going to happen,
Hold on, Gary, go, Gary.
Look, it is a tough business. If you are not on your game, you're dead. Look what's happened to Motorola stock in the last year while Nokia has been soaring. It is about innovation. It is about the best product and the most accepted product by the public, so you best be on your game. Apple iPhone, I don't think it's the greatest in the world, but it has the Apple name, and it's good enough, and that's why it's selling so well. But notice, they had a lower prices also, $200. That higher price just wasn't going to play out over time.
Peter, you probably have nothing to say, but go ahead.
Well, the one thing I think everybody is underestimating is I think you're going to see a softening in demand domestically for these cell phones, particularly high-end cell phones. Over the next couple of years, Americans are going to be cutting back on their cell phone usage. They're going to be struggling with adjustable rate mortgage payments, higher food costs, higher energy costs, you name it.
I'm shaking my head. You know what I'm remembering, Peter, what I'm remembering is not only the high inflation in the 70s, but I remember interest rates closing in on close to 20%. Remember that?
Yeah, it's going to be here again. You're not going to have to remember way back to the 70s.
I'm moving to Switzerland.
And you can be able to check that out on your phone, on your Google phone, as you check in for your best
Pat,
meeting
great way to end, Pat Powell.
Thank
Thank you very much. Okay, gang, we'll be hearing more from you.